This manager managed to rack up 45% CAGR returns over the last 25 years. Now, this is not easy, but in today's video, I'm going to actually talk about the CANSLIM strategy by William O'Neill. This is a growth investing strategy, and we are going to give you a screener that you can use to actually run and find the list of stocks. And hopefully that should...
Please video देखने से पहले subscribe please
like also
मेरा incentive रुका हुआ है
कब से होप लग
बहुत सर बोलो ना subscribe
like please like
subscribe kar do, please. Anyway, let's start with the growth investing strategy. I'm sure you're going to love it. Step one is the CANSLIM formula is actually a abbreviation. So CANSLIM actually stands for something. It stands for this, but you don't need to worry about what the full form is. An interesting story is of Chrysler. So I know we don't have Chrysler ke stocks in India, but this is what the chart looks like. Isn't that beautiful? Just look at this with me. We started this pricing at around $10, and it went all the way to 60. And William O'Neill actually used this formula to capture stocks like this. Now, do all stocks look like that? Of course not. But this formula makes it easier to actually find such stocks. Now, the question is, does this work in India? You'll be surprised to know these guys, renowned investors who manage thousands of crores, actually use CANSLIM or a variation of CANSLIM. So ये Indian stocks पे भी काम करता है. But let's understand what growth investing actually is. Think about this, right? If you're sitting inside a room and that room has multiple people over there, all sitting over here, like every single personality is different. The same way, a personality is suited to a kind of investing style. Some people don't mind waiting for 20, 30, 40 years. Other people might want some kind of activity, if not an exit, every 6 months or so. Maybe they want to rebalance or double down or do something else. Other guys might want to do a hybrid of both of these things. Other guys might want to trade and do investing. Basically, everyone is very different. So out of all the styles that are available, we're going to focus on growth investing this time. And maybe put it in the comments if you want me to cover a different style. Suggest, ask us, and we'll try to make different styles on this channel. Think of growth investing something like this. Two cars, one kind of racing is called drag racing, where you basically have to do this burnout. Your car can completely total, but you have to complete this few 100-meter race and see who wins over there. Now, at the end of this, if your car looks like a steaming bag of potatoes, it's completely fine because the purpose was to win this short war. On the other hand, you could have a much longer marathon that you're doing, a cross-country race across the country. Now over here, the pace matters, but the speed doesn't, because आपको बहुत लंबा रास्ता चाहिए. So over here, your tires must be good. You must make sure your oil is fine, your air filter is fine, etc., etc., etc. In other words, this is a long-term game. Growth investing is kind of like that. You have to make sure the product is good, the management is good, the sales are growing over a long period of time, and then you zero in on these companies that can last a really, really long time. In other words, we're not looking for a pop and short story जहाँ पे a stock went up very quickly, got 100% returns, and then went bankrupt. Let's see what CANSLIM is now. So C stands for current quarterly earnings per share. Basically, you want to make sure that the earnings per share, or the EPS, is growing every quarter. This means there is momentum in the sales. Demand is good, supply is good, product is good, market fit ho raha hai, it is moving up. Now, of course, this makes sense. Of course, you want quarterly to be going up. But think about it. Quarterly, or say the last 4 quarters or 5 quarters, is still only just about a year. What about the last few years? Which brings us to the next, which is A, annual earnings growth. It's the same thing. You look at EPS, but you only look at EPS on a yearly basis. So here you can see whether the annual EPS growth was at least 20% over the, say, 3 to 5 years. I would still say 3 years is a small time frame. 5 makes more sense. So now we can see that there's been long-term momentum upwards in sales, and quarterly makes us make sure that the last few quarters, very recently, are also doing well. So this takes care of earnings growth. C and A. N is new products. Now think about when Tesla actually launched. They talked about the future, they talked about solar panels, they talked about their new cheaper car arriving. This is where price discovery happens. When a company doing something very well says, now we have an X factor coming into the market, it changes the future of that company. But to be honest, it changes the investor perception of what that company could do in the future. You tell me, when you heard about ChatGPT and found out that Microsoft owns it, or maybe you're finding out right now, do you think Microsoft could do better in the next, say, 2 or 3 years because they own OpenAI? I'm sure you think, wow, that's an X factor. They could use it on all of the Office suite. Similarly, investors, when they see a new product that they see in the future can change the fortunes of the company, that X factor really matters. So N stands for new products. This could also be a new management or could be just a positive event to push the company's perception of their future growth in the next 2-3 years. S stands for scarce, which means it's not something that is in limited supply. Now, William O'Neill saw this in 2 ways. First, the stock must be in scarce supply, which means hopefully the promoters own a large portion of the entire shares. Maybe they're doing some buying. But most importantly, the industry should be owned mostly by 3 or 4 or 5 players. Say the paint industry is actually only 4 or 5 players that are actually running it. You don't want too much competition. Most industries have an oligopoly, which means a bunch of players own most of the market. So you want to make sure you're not in an industry which has too many players and market share ownership is a little tough. Next, we have L, which stands for leader or laggard. Now, there's a big debate. Should you choose a leader in the industry? Because, well, he has market dominance. He owns the price. He owns the premium. And people actually trust that product. Think about, say, Tata's in a certain industry. It might be the leader. But on the other hand, William O'Neill actually believed in the laggard. He thought a high momentum company, which is doing well, has an X factor, earnings are growing. If he's number 4 or number 5 on the list, he is actually a rising star and value can be unlocked there. So I'll leave this for you to decide whether it should be a leader or laggard. You tell me in the comments, what do you think makes sense? People like Atul Suri believe in leader. William O'Neill believed in laggard. I'm sure you can use them both, but the key is once you decide whether leader or laggard, you stick to that for the next 10, 20 years. But put it in the comments. I'd love to know what you think. Then we have I, which means institutional sponsorship. सीधा बोलूं, foreign company का पैसा आना चाहिए इसमें. You want to make sure hedge funds, banks, and other people actually sponsor or own this stock because, well, they're professional investors and have done due diligence on this company. But you don't want 90% ownership of institutions either. Maybe a good mix is 50% or 40% owned by promoters. It could even be 60% for certain companies and the rest owned by institutions. Somewhere in that range, that mix is important. For example, if promoters don't own enough, then the investors will fight among themselves. But if the promoter and investors have a good mix, they can keep each other in check because the promoter pushes the company forward and the institutional sponsorship makes sure all the due diligence checks, financial regulations are all being followed. That mix is generally a good mix for a management. And finally, we have market direction. Agar ye sab kuch ho raha hai and the price is doing this, nothing will happen. So you have to make sure price is an uptrend, which brings you to my point. तुम जितना भी fundamental analysis करो, थोड़ा सा technical analysis तो करना ही पड़ता है, right? Anyway, you have to make sure on a monthly chart, the stock looks like this. Look at, say, Britannia. Look at, say, any of these companies over here. They're moving up over a long period of time. It also means all the players in the market are buying the stock over a long period of time. So, market direction. You could simply put a 200-day moving average. You want price to be above that for a long period of time. We've identified one company that fits this entire framework. But this is not the best way to learn a framework. A better way to learn a framework is by doing 3 things. First, you must actually learn something in theory, like you did today. But while a class is on, hopefully live, you should be able to build that portfolio during the class. Second, you need to make sure that that mentor live is actually giving you feedback whether what you did was correct or not, individual to yourself. And third, you should do this over 2 or 3 days in a community of other learners like you, because many times your batchmates could be smarter than you and you could actually ask questions you can't ask the mentor. So we thought we should make this classroom way of learning, learn by doing, proof of work online on our platform for free. So click on the link in the description and join we call something called Trading Prime or Investing Prime, where over 2 days you learn in just the way I told you for no cost at all. The only problem is we discovered that this is very tough to do and people aren't able to complete it because it's pretty challenging. So we made the application really, really tough to make sure only the serious guys get in, because when something's free, you get a lot of freeloaders, and we do not want to do mehnat on people who are lazy. So if you think you are those guys, if you're one of those people who identify with that doer culture, fill up that form and I'll see you this weekend. So the company I'm going to talk about is Varun Beverages. If you've not heard of it, I'm sure you've sipped one of its products. It's this, they're bottlers. And the market cap of this company is 1 lakh crore, at least when we were doing this video. First, what I'd love to do is, CANSLIM mein, the last metric is the chart. So let's start over there because, at the end of the day, I love to see charts. So you can see over here, over say the last 5 years, look at that chart, man. Look at the last 3 years. It's a nice, beautiful uptrend. But anyway, let's not get geeked out on my technical analysis. Let's go through CANSLIM in sequence. First, what I'll do is, I'll scroll down and see their quarterly results because we have to look at quarterly EPS growth. I'll scroll down, ignore everything, guys. So what I want you to do is just look at the last line here and let's see whether that quarterly number is going up or not, okay? So you have 2.17, 2.3, minus 0.30, 1.99, 4.7, 3.7, 0.5, 0.2, what? 3.9, 12, 5, 1, and then 6. It seems like there's 1 quarter every time which goes down. So I would actually rate this maybe a 2 out of 10. I don't think the quarterly growth is good. But anyway, let's see the next metric, which is your EPS on a yearly basis. Let's look at that. So let's see this from 2017. 3.4, 4.75, 7.22, 5, 10.23. Not bad. This is actually moving up quite predictably. So it seems like on a quarterly basis, it's quite erratic, but on a yearly basis, it's a smooth run up. Yearly, I would say I'd probably give this a 8 out of 10. I think it's pretty good. The next metric is N stands for new products. And since the trend seems to be that we're going from soft drinks to energy drinks, they have these new items in place. So there are fruit juices, there are energy drinks, and there are also milk-based drinks. Now, for people watching this, I don't think energy drinks is good for you. Please don't have it. But let's stick to the business over here. But N, new products, that seems to be happening over here as well. So next is scarce. Basically, there should be only 4-5 players doing the same thing and not too many. If you look at peer comparison, you'll notice everyone else in the peers are not bottlers. They are FMCG. So Mrs. Bector's, for example, does not do bottling, right? They make sauces and they do other FMCG products. Varun Beverages in this list is the only bottler. So this is pretty scarce. There's koi hai hi nahi karne wala. Which also means in the leader Lagarde, this guy is the leader. So ye do to check ho gaye hain. I is institutional sponsorship. So what I'll do is I'll just scroll down and see. I can see that 63% is promoter holding, 63.9%. FII is on 26% and DII is on 3%. Public owns 6%. I always generally think public holding kam hona chahiye. Because people like you and me aren't smart enough to spot this. We want to find a small cap stock and ruin all of the money we've saved. So generally speaking, the good companies, all of them have low public holding, higher FII holding, and decent promoter holding. We have a decent mix here. So it seems like everything is a check over here, except the first CANSLIM ka C, which is quarterly earnings growth. But I think we can give it a miss. I think it's fine. Now, we can't do all of this for all the 5,000 companies that are listed, right? You'll need a quicker way. So if you go to the description, you can find a screener. Click on that screener, and I'll do that with you over here. This will pop up and just sort it by market cap. And when I did that, Bajaj Finance, Adani Green, Varun Beverages, TVS Motors, IRCTC is what I got at the top. And you get this entire list of about 55 companies. Now, what you can do is, because you should not have a portfolio of 55 companies anyway. It should probably be 10, 15, 20 companies. What you should do there is you should probably give the CANSLIM rating for each and every one of them and find which of these make to the top of your list. And of course, you should keep rebalancing every year or so. But I would still say this, if you want to do this in a community with feedback, so a mentor tells you where you're going wrong, where you're going right, and you can just learn from each other in this amazing place, fill up that form. Hopefully you're one of those gritty ones which can actually make this work. And tell me, did you enjoy what you learned today? Should we cover more frameworks? Please put it in the comments below. And I hope we can make more stuff like this because we are really trying to do a good job on YouTube. I think most YouTube creators out there are not really focusing on research, and I can literally count only a few of them who are really putting their heart out to make sure the research is really good. So if you're doing a good job, please put it in the comments. I think we all need some encouragement, especially us, especially founders, especially people in the studio right now working on this. So yeah, put a like, give a subscribe, tell one friend about LearnApp, about our YouTube channel, and hopefully we'll go from there. See you in the next video.